Well, good morning. It's something out here. It's the 29th of July, 2025. It's 0800 in the morning, 51 seconds, Central Standard Time. This is my virtual trading journal. Let me just see here. It looks like everything's working okay. The stream is flowing and all the bars are moving, so it looks to me like we're broadcasting live and direct here. Okay, so this is my virtual trading journal, as I said. It's not for any financial advice. There's a disclaimer in the description. It's also important to note that I'm not monetized for this in any way, so this is, there's no motivation here other than my virtual trading journal. And I do this because I don't multitask well. I believe that a journal is very important, but I don't multitask very well, and I want to focus on trading. So if I'm busy screen snapping and typing somewhere, that dilutes my focus, in my opinion. And as a result, I came up with this idea, which captures everything I'm watching on my screens, and then my voiceover here provides some insight as to what I was thinking. I stream this live to YouTube because basically three reasons: complete transparency, accountability, and I can review the stream on any device. I don't have to be standing here at my desks. I have a commitment that I will take no trade at all, ever, on these accounts off the stream. That's the reason the stream is so long, from now, the pre-market, through the cash close at 1500. And that's, the reason for that is, obviously, I have a complete, undeniable record. And the book map so beautifully records every aspect of a trade, entry, any kind of movement of stops or targets, and records the P&L and ticks, whatever, up here. So it's all absolutely transparent and accountable. Now let's jump into some of the more important stuff here for the day, which is what's going on here. There we go. Lots of numbers out. This is a huge week. I talked about it last week, or yesterday, and Sunday. We have there are 18, 4, 3, man, I can't see what I mean about multitasking. I'm trying to move some screens around here and talk at the same time, and I'm stumbling all over myself. Excuse me. That's the reason. Anyway. This week there are 18 three-star events, and there were none yesterday on Monday, so they are all between Tuesday and Friday. Today we have, at 9 o'clock, we have consumer confidence and the JOLTS report. The rest of the week we have some pretty staggering stuff here. We've got the Fed, FOMC statements, we've got GDP, we've got non-farm payroll change. On Thursday, we have core PCE, initial jobless claims, Chicago PMI, and on Friday, we have non-farm payroll, which is, of course, huge. Unemployment rate, S&P Global PMI manufacturing. And all of this is transpiring at the same time as Tremendous earnings on all the biggies. Visa, PCA, Microsoft, Meta, Qualcomm, ARM throughout the week. So it's a big, and then of course Trump is not to be outdone. He's busy with the random risk and all of this trade and tariff talk. So it's a doozy. Stay sharp and don't overtrade. My recommendation is pick out one good trade and strategy that you have and trade that. Moving on then to the pre-market. Let's see here. Okay. Here we have the overnight trade thus far. I marked the start of the session with this blue vertical line so I don't have to look around at the clocks or whatever. I can just immediately know where the session starts were. You see that we've had a progressively increasing VPOC, and we're up here right now. We have gotten higher than the all-time high set in an RTH session, which was on the 25th, but we have not gotten higher than the all-time high set in the ETH session on the 28th. So yesterday, I would say that this is on the table for today or this week for sure. Anyway, that's just, you don't predict, trade what you see, et cetera, et cetera. Here's the full session. Renko charts for the ES mini. Here's yesterday's RTH, and here's the overnight. They couldn't get enough of it. Same story over here with the NQ. This is the ES micro composite chart, which is a RTH session chart, and these are daily bars. So wherever price overlaps, I draw a volume profile, and that, in so doing, it generates a microcomposite VPOC, and it generates these high and low volume nodes, these red and green lines, which just represent the high volume and the low volume node within this microcomposite volume point of control or volume profile. These red and green lines are pushed automatically to bookmap, as are the session prices. This is the market profile for the ES mini. I also plot the same exact setup for the micros because I push these numbers and share them, these levels, with pretty much anybody that wants them. If that would be helpful, here, drop something in the chat and be happy to share them, as I do with all the people in T-Lab and around. All right, back to the job at hand here. So we come back to the book map now. This is the micro composite column where I manually enter these values. My workflow is as follows. When a level has been revisited or is no longer the current, I change the text to black. So this is the full session volume profile, which started plotting at 1700 last night. And we'll plot through 1600 today. This is not the ETH, this is the Globex or the full session. This is the RTH session volume profile, which will reset this morning at 8:30. It's been having a real problem doing that automatically as it is configured to do, and I don't know why, but it's frustrating. I do have it set so I can double click the column and manually reset it. This is my notes column, which is important to me because it's where I flag the migrating VPOCs, and I also input the statistics associated with the price levels based on the open type for the day. One of the first things I do is change the column title to the open type for the day. And I absolutely hate this configuration because, yeah, well, let me explain. First of all, how you figure the open type is real simple. It's only based on two criteria. It's based on where we will open today in the RTH session compared to the previous RTH session close right here and the previous RTH session range, which is right here and right here. So if we were to open right here, right now, we would be exactly on the previous RTH high, which is irritating. I hate that. It needs to either be high or low, you know? So higher in range would mean we're above the close and we're below the previous high down here. Higher out of range means we're above the close and above the previous RTH high, obviously. At this moment, we're exactly on the previous RTH high, and that's irritating to me. These are the session prices, which are self-explanatory. And you'll notice there's no indicators on my charts or book map. There is a POC for the full session and the RTH session. The POC is just the price at which the most contracts have traded so far in the session, nothing more. Right here at 37.75, the most contracts have traded so far in the overnight, which is 37.59. The very split second that one of these other levels down here has 3,760 contracts, this yellow line will move there. That's all there is to it. There is a VWAP, volume weighted average price, for the Globex and for the RTH. And there is a mid for the RTH only. You can't see it because, let's see if I can get that expanded. There you go. There's also a couple other prices that are sort of important and sometimes cause confusion. This is the IB low and the IB high. It's this green flag right here. These are old acronyms for the market profile days for initial balance. What it really is, what they really represent, are simply the high and the low of the first 1 hour of the RTH trading session. That's it. There's nothing magic or mysterious or hard or confusing about any of these levels or how they're derived or why they are where they are. POC, the price at which the most contracts have traded so far in the session. The minute one of these other prices trades one contract more, this yellow line will move. The IB high and low, simply the high and low of the first 1 hour of the RTH trading session. When the session starts, they will mark the high and the low. As this price moves up, the IB high will move up. As the price moves down, the IB low will move down until 9:30. They do not move after that, and that's when the IB statistic comes into play. And the rest of them are straightforward, you know. So that's how the whole shooting match works. Bookmap and IRT. Now what we'll do is take a quick look at the, we're still right on the top of this. At this very moment, now we're up here, right? So we would be higher out of range. Second we go under this, it'll be lower, higher in range. And I'm not going to enter these statistics because it just makes me mad. But the statistics are gotten or obtained this way. This study in IRT does the statistics. IRT highlights the correct column after the open. So after 8:30, whichever one of these, higher out of range, higher in range, will be highlighted blue. Or, you know, if it's one of the other four. Now, first of all, there's only four open types. Higher out of range or gap up, higher in range, and lower out of range, gap down. That's it. The study looks back at 2,000 days. Of these 2,000 days, price opened higher out of range 513 days. Of these 513 days, same for all of these, right? Of these 513 days, price revisited the overnight volume point of control 80.5% of the time, or 413 days. And that's exactly all there is to it. Now, I will put this in just to show you how I do it. At the moment, let's just make sure. At the moment, we're still right on the cusp. So let's say 80.5 is it, right? Just for sake of example. Here we are exactly on the cusp, so we can't call it one way or another, but we're gonna enter it in. I do, just click and go 80.5, and there you have it. That is it. Now these are not hard and fast targets. They are statistical probabilities looking back over a 2,000-day data set. You have to remember that the market is random. The probability of the next trade is always 50-50. That is a statistical fact, whether you want to believe that or not. And therefore, to put a hard target or a prediction is not a good idea, because it's a random market. And probably one of the most important sentences you ever hear but don't pay any attention to is past performance is not indicative of future results. That is a statistical fact. That's got nothing to do with law. It is a statistical fact. You can have a data set of 15,000 days, and that does not affect the outcome of the next trade, which is probability is 50-50, because it's a binary market. The market price only goes up and down. There is no horizontal movement. We put that on there with time. So there's that. Now I'm going to just stand by here on this price because this is so frustrating. I mean, right now we're higher out of range. A second ago we were higher in range. I will have to put these statistics on as the day unfolds, unfortunately. And our first big numbers here of the day are at 9 o'clock, so bear that in mind. It's irritating. So the next thing that's important to do at this point is to be able to trade, right? And so to do that with Bookmap, you have to activate the trade control panel with this button and decide a method or choose a method you will use to trade with your mouse. If you choose chart, the only place you can click with your mouse to trade is this active data column. If you choose dome, the only place you can trade with your mouse are the dome columns. And both is, as you guessed, both columns. You can always trade, as long as one of the three is selected, you can always trade with your keyboard hotkeys if you have that enabled. However, if you're going to use your hotkeys, you have to have, the computer has to have focus on the Bookmap application browser here. So if I had clicked over on IRT someplace, looked over here and saw a trade and wanted to trade it with my keyboard, wouldn't work. I believe that you get more accurate and more and a faster execution with Bookmap trading with your mouse. So that's why I use both now. The next thing I need to do here is I trade with multi-brackets, and I use a risk-neutral setup. Needs to be an even number of contracts. The stop for all of the packages is at the same tick price. Once this tick level is established, then the risk-neutral the first profit target, which is risk-neutral scale, is for the same amount of ticks as is the stop, but positive, obviously, and for half of the package. Then you have the runner. The minute this risk neutral scale is achieved, the trade is risk neutral, and the worst that can possibly happen to you is a scratch. If you do 4 lots, guess what? 4 lots, tick size, stop size, same number of ticks as is the stop, and for half of the package, and then the runners. It's that simple. I also do the multi thing here over here. And that is because this account is a TopStep evaluation, or combine, they used to call them. I think it's called evaluation now. I'm not sure. Anyway, my thinking was that I would take a TopStep combine for sake of, just to display what can happen. I can't think of the right word here, but anyway, from the combine through the XFA, through funded account, through live account. And that's also why it is important to me to commit absolutely never take a trade off the stream. And so that's the reasoning for that. So once I have established my scale, I verify the proper number of contracts over here, and I click the button again. It stays green, padlock stays unlocked, but I get the real estate back, and I don't trade my P&L. I have the same data available to see up here, and I can cancel or close. And this is all set for ticks, because I don't think you should trade your P&L. And hold on 1 second here. The next order of business is the T-Lab snap, which I try to do every day at about 8:20. I do a couple of them, actually. I do one at about 8:20, and I do one at I do one at 8:20, and I do one at 6 o'clock in the morning, roughly. I post all the numbers then. And this one is a snap I've done for a long time. The idea being to kind of give people that don't have the same kind of charting a leg up, or an ability to see all these different numbers. Let's see if I can get this done without screwing it up. There we go. So just stand by 1 second. All right, sorry for that. Now, what I was going to say here was that the T-Lab is a Bookmap Discord chat room started by a guy named Tom B. He is a professional trader with 46 years experience, and I believe that's true. He's never shown his account, statements, or he doesn't trade live, and he doesn't call trades. He does narrate and participate all day, and he does a live stream from like 10:30 to 12 every day during the trading day. But it's a look back, more of a rearview mirror deal where he narrates kind of what has happened. There's a good crew of people in there. And probably one of the more important things, in my opinion, is that you're never solicited for anything, including a Bookmap subscription, which is pretty incredible. So what you do is you have to join the Bookmap Discord server, which there's a link to that in the description here. Then after you have done so, navigate to the Traders Lab Tom B. There's the snap I do every morning at about 8:20. So go there. Now, this is the only, I don't make this recommendation for any other rooms in the Bookmap Discord area, because I haven't been to all of them, and there's, any others actually, and there's a lot of them, I believe. I did visit briefly 2 others, and they were much more typical in that, about the third word out of the guy's mouth was trying to sell you something, which is completely fine. That's their business. And if it's Bookmap wants to support that, that's Bookmap's business. But it isn't of interest to me, and I don't recommend them as a result. I do recommend the T-Lab and Tom B, because I believe he's the real deal. And outward appearances, unless he owns Bookmap or something, which is entirely possible. His agenda is to try to help traders get better. And that's pretty rare in this day and age. There's a good crew of people in there. Ned, Lefty, Rod, didn't matter. I can't. Lots of people. Harry and Antonio. Lots and lots of people who are pretty much adult. It's not like Romper Room. There's a focus on making trading a business. And so that's why I am comfortable recommending that site and no others. Well, we are going to open, it looks like, higher out of range. So I'm going to change this name here quickly. Whoop. I'll change the name to higher out of range. And then, of course, it'll immediately make a liar out of me. That will change the configurations. Yeah, sure as Christ. 2 minutes and they're going to take it back down again. So I'm just going to stand by on the levels, sorry. But I'm tired. I type them all in and then I got to turn around and go back and do them again, If we open higher out of range right now, the overnight point of control is 80.5, which I've already got in there. The next order of business is the overnight high, which is 77.4. Going to open in a minute and a half. I better scoot here, right? Then we've got the IB high. Well, that's a good one, 65.9. So we want to find the IB high, which happens to be right underneath it here. I'm going to put that in there like this. What is it? 64.9. And I do this, IB high. Why? Because the minute we open, the IB flag is going to move. And it won't be here anymore. And I will go, what is 64.9 represent? So now I know. The previous high is 64.9 also. Wow. And that's correct because they're both right together. Isn't that funny? They're both the same. And there they are the same. Here, I'm not making it up. Look at there. The IB high and the previous high are 65.9 and 64.9. Well, call me a liar. Okay. For a point. I'm going to leave them like that. And I just go down the list. The IB low is 58.3. So it's right over here, 58.3 IB low. And we're going to open in a couple of minutes, so I'm going to stop doing all of this. Whoa, now. I'm going to stop doing this. Get ready for the open. I'll have to probably reset this column, which doesn't seem to want to do it anymore by itself, frustratingly. So hook in and hang on. There you go. We're open. The minute that moves, we're open. And this is supposed to reset, and it has not done so. There it goes. It did react to my double click, which is okay, I guess. And here's my first, migrating VPOC. Actually put that right there. That's how I flag them. Yes, the yellow brick road will continue to plot through the day, but pretty soon they'll scroll off the left of the screen. So there you go there. And we're migrating up. I'll get into what I'm looking for as we progress. So we've already taken out our overnight high, our overnight VPOC. This will flag the open here pretty quick. Now, technically, excuse me, technically we have opened in a gap. Gap rules say that if we close the gap relatively early in the session and are accepted within previous range and value, we will trade across that previous range and value. The gap is pretty narrow. There's our open and there's our gap. So we're looking at 3 handles of a gap, and in about a second that gap will have closed, and there you go. Never mind the gap anymore. So we've touched it. We haven't really closed into it or been accepted yet, but that is the close of the gap. Open to gap. So not a hell of a lot to lean on there today. I think all of the there's so much news out, and don't forget we have big numbers out this morning at 9 o'clock, top of the hour. Between all this trade crap and all the microphone hogs that are, starstruck, guys that have never been talked to anybody before or been noticed by anybody before, a lot of them, and are suddenly stars, and they're being interviewed and their opinion matters and these kind of things. And I can see that's fame is a drug, right? Excuse me. Okay, looks like the stream is flowing down the hill. Okay, let me get my upper monitors and that computer running the stream so I can monitor what's going on over here. Make sure everything's okay from that point of view. There we are. Okay. Seems like that's fine. So that's good. Well, we closed the gap right here and have not necessarily been rejected out of it, but we're not exactly flying down here to the close or the overnight low. So remember that here was our close from yesterday. Here's our previous RTH high. Closed the gap down to the mid, overnight mid. And now we're fussing around up here somewhere. And we got this little crazy Ivan right here is you see the darker, more muted yellow, that is the full session VPOC, and this brighter yellow here is the RTH session. So right now we have just migrated down. Ooh, we keep going low, keep bouncing around a lot. Obviously there's this yellow line here is a lot more volatile in the initial stages of the market because there's not very much volume traded yet, and there's a lot of volume coming through. But have I forgotten to do something? I don't think so. Yeah, numbers at the top of the hour. I would suggest extreme caution in this week. It's just about every kind of. The only thing we're not getting this week is a quad witching or something, triple witching or something. But other than that, we've got the non-farm payroll. We've got all these huge earnings reports. We've got, the random risk of tweets and interviews and stuff around trade and all these tariffs. Trump, anytime he's traveling or has an opportunity, sees a microphone, he gets all excited, as do apparently his other cabinet folks. The Letnick seems to really enjoy the spotlight. And so in my view, that those are called random risks. You have no idea when they'll happen or what they're going to say. All this story about the EU deal is not necessarily been reported very accurately. There is no blanket tariff. There's a whole range of varied tariffs, and none of it has been accepted or set in stone or anything else. It has to be ratified by all 26 of the EU members. So, and they did, they rolled off the China tariffs for another 90 days. So, it's real hard with this group to separate the wheat from the chaff, I think. Okay, let's see. We've got all the charts on the right settings. Once the market opens, I set all of the IRT charts to the day session only. That has an effect on which flags report previous auction. The most important one is the value area high and low as they compare to the developing value area high and low. The developing are for this current auction, and the value area high and low are for the previous auction. Now, the second that the RRT at the RTH session opens, if I didn't change the IRT charting, this value would reflect the just ended ETH session, which I don't want to do. So that's why I changed my IRT charts to the day session after we've opened. And there you go. See what happens if I do this now. Want to make sure these are accurate. So you see that there's the IB high and there's the IB low. Okay. And then here is the IB high and the previous RTH low. High, excuse me. So we did close the gap, tested down here and just poked our nose in there, and here we go back up the other way. We have the overnight high above us, and we'll see where we go from there. Expected move is up there at 64.4375 for the day. Which isn't far away. That's right there. Right there. So it is Tuesday, the 29th of July, 2025 at 08:39.50, 08:40, just. We've got 9 o'clock, consumer confidence and JOLTS, two big numbers. And then 11 o'clock, we've got a 7-year note auction, and that's important. What we got some earnings calls out today. Boeing, Starbucks, Merck. Excuse me. This is the Financial Juice. Both Financial Juice and investing.com. These are both free versions. You can pay for them if you want to, but I use the free ones to try to illustrate the options in the stream here. Now, in case you're not up to speed with what I've been doing, I am currently vetting and only trading the IB trades. So the IB, just to run through that one in a couple of minutes here, remember the definition of the initial balance. It is the high and low of the first 1 hour of the RTH trading session. So these will continue to move up. This will continue to move down with price for the first 1 hour. After that time, after 0930, they won't move anymore. And there is an old, well-known, well-understood statistic around the initial balance. And that says that with a greater than 97% probability, the IB high or the IB low will be exceeded by price in the balance of the RTH trading session. Okay, that's the statistic. Now, there are 2 trades associated with the initial balance that I have identified, and I agree with. I shouldn't say I identified them to start with, but you know what I mean. I've adopted, maybe that's the way to do it, and I'm trying to vet them to prove to myself with my own data that they are accurate. And what they are is, based on the context of the day, you have an IB continuation or you have an IB failure. The IB failure is a mean reversion trade, outside in. And the IB continuation trade is obviously more applicable to a day where we are trading directionally. So I don't try to bet on the come. I don't go, ooh, okay, we're below the VWAP and below the POC, and I think we're going to get the IB low. I don't trade that trade. I thought that was a good way to go long ago, and that is not correct. So I wait for the statistic. In other words, I will stand here and narrate and watch until 9:30. Now, something I picked up from Rod, which I like here, if I can show you. Come on. What am I doing here? Oh, you know what I didn't do yet? Football. I didn't mark the open yet. So here's 8:30. Okay. I was busy looking for my vertical marker. I mark the open of each session with that line right there. Now, through the day, I will keep the entire session visible in the chart. In other words, this line will, after we get a little time under our belt, this line will live right over here and we'll see the entire day. Then when I am getting close to an anticipated point where I would interact with the market, I can zoom in. That's one of the benefits of vetting and using structured trades, that you have vetted the setup, the required parameters, all those things. It's not a surprise. It's not like a rodeo or, clicking the mouse like you're killing snakes. You're standing there waiting for a setup, and you see the setup starting to develop, and so you anticipate it. It's a much less stressful way to go. And then I use the risk neutral trade management setup. And so once the trade is on, then you just let her play. And here we have touched the IB twice. Not exceeded it, just touched it so far. Something doesn't look right here. So here's 8:30. There's our open. There's our opens covered up here now. We did just close the gap right here. Right there. We've extended our IB low just a little bit right here. From here. There was the original IB low. And now we're down here, coincidentally, at a level where we traded in the pre-market. Remember that this IB low wasn't here then, because these levels are now current and applicable to this trading session. It's a little bit misleading because these flags are just in the center of the window, or these titles. Had one hell of a run up in the NQ last night. Gee whiz. 150 or 60 handles. Ticks, I'm sorry. Okay. Well, and we're having a big paparoony here on the big paparazzi on the TopStep thing. So we extend lower, huh? Remember that we've got big news out in 10 minutes. Well, at the top of the hour, it's 48 or 49 now. So we've got basically 11 minutes. And I have all the time in the world here to adjust stuff and figure this things out, because I'm waiting for the IB trade, and that will only set at 8:30. 9:30. Football. Maybe I better go back to bed. Somebody didn't like something there. Closing VPOC is right here. And here's settlement. And we're back under the RTH all-time high. This is kind of a random. I just started doing this because. Morning, Antonio. Big news out here, as you know, 10 minutes, top of the hour, there's jolts and consumer confidence. In the next 4 days, there are 18 three-star news events, never mind all the random risk of the folks there who are doing all of that. Lutnick seems to be quite enjoying the spotlight. Okay. 7 minutes. Yep. What's going on now? Okay. It's pretty interesting how they have usurped control of, and I guess it's the reality TV model where they just are trying to control the narrative and do all these big announcements about the EU this and the EU that and all this kind of stuff. And There is absolutely not a blanket 15% tariff been agreed to, A. And B, nothing's been agreed to. It needs to be ratified by all 26 or however many, countries there are. Crazy. Meanwhile, they're, starving women and children to death in Gaza, and nobody says boo. Crazy. And Trump awarded a $1.3 billion contract. I remind all that we're cutting costs and Doge and all this stuff. $1.3 billion contract to build a new, what has been referred to as concentration camp for detainees. And all these flying around. I forget the original the numbers exactly. I actually knew them once. The cost per hour to move the president with Air Force One, and wherever he goes, there is Air Force Two in trail in case something happens, an identical plane, and at least 2 C-130s with all of the motorcade, etc. It's somewhere around $750,000 to $1 million an hour for that exercise. It's complete misdirection, all this, what we're saving and all this kind of stuff is just pandering to the base, I believe, and complete misdirection, really. There we go. There's that number coming out. Well, did it get out early? Look at there. 3 minutes and we got a big pop, or somebody said something. Anymore, the minute I see something like this, I figure it's random risk and I look at the news, which is kind of too bad, right? I mean, I know that there's not I know there's no number out yet, unless, who knows, now I guess maybe now you can pay and get them early. I don't know. I got no clue. Well, we have, let's see, nothing that I see any place here. Well, it's kind of weird. We got a minute 52 to JOLTS and consumer confidence, so I don't know. I got no idea what is happening anymore. I've gotten to a place where I just kind of want to take my little trade and get myself over for the day and get away from it. Which I don't do, of course, but you know what I mean. It tickles me also to hear these brash statements about how well, I'm over, I'm tired of Putin now. He's got 10 days. Who the hell is this guy? Who does he think he is that Putin or anybody cares? Obviously nobody does. I guess. I don't know. I don't think that's good diplomacy necessarily. Especially with loose cannon like that. I don't, but I've never lived in Europe, so I don't know. Closest I've come is a visit a few times to England and then a trip to France and Switzerland, and that's about it. Kind of funny how my life always sort of evolved along the equator. I guess I'm kind of a third world man, I guess. We got a VPOC migration down, 3 seconds. Let's see what happens. There's the time. Whether that's going to do something or not, I don't know. Doesn't look like JOLTS or consumer confidence had a big effect one way or the other. Kind of weird. That's about a nothing burger if that's all we're going to get. Consumer confidence is 97.2. Forecast was 96. Previous is 93. I'm assuming that means the consumers are confident. I'm not sure what they would be confident about. I can guarantee I'm a consumer here and I'm not confident. But I'm confident that prices are going up without any question. And the JOLTS number is 7.43 and 7.5 forecast. 7.437, I should say, is actual. And 7.5 is forecast. So interesting reaction, huh? Wow. I wouldn't know what to say about that. Now, the day is starting to develop into a more of a directional day than we have been the last couple of 3 sessions, where it's been started out with a real tight rotational. So for my IB day, I'm starting to think now that I'll be looking with an open mind at the IB continuation trade. The last couple of RTH sessions, I was real tight rotational, and ultimately which would suggest the IB failure, but ultimately the IB continuation turned out to be the trade. I didn't get the tanker turned around mentally to recognize that. And of course, I didn't take a trade. Just, as a gamble. Unfortunately. And I was trying to get to the bottom of this thing with a clear, logical process. Now, this is the all-time high put in during the RTH session on the 25th. Excuse me. This is the actual RTH session, what am I talking about? It's the actual all-time high for the ES put in during the ETH session of the 28th and not retested yet. So there's that. Okay, I don't see anybody babbling about. I don't see any great. Here is the financial juice, of course, and there's the reporting and the jobs reports and stuff. We, on top of all this earnings this week, of all these numbers this week, we've got a bunch of big earnings, so it's an exciting week. I think everything seems to be working okay. Quite a big nothing burger on those numbers. That's pretty, or something's wrong. Or my data is broken or something. That's pretty strange. I guess now that the only thing that the market's paying attention to are the microphone folks, I guess. Well, we still have a naked volume point of control that I didn't get in here. At 64.23. Yeah, I don't have it over here because I was thinking it was going to get taken out pretty quick. I always flag this inside this column as the most current naked volume point of control for the previous RTH auction, most recent auction. It's actually a naked volume point of control over here, technically. I probably ought to put it in there because who knows anymore. Wow. What a tight market for big news, huh? Crazy. I guess. Pretty soon we're gonna fuss around and be down here at 9:30. Okay, so here are the naked volume points of control and micro composite VPOCs and all that stuff. The micro composite chart as I've got it figured out here. On the mini. The NQ didn't close the gap yet. Here's the RTH high, and there's the ETH mid, and here we are. That's as low as we have gotten. So we're still a handful of handles away from there. Pretty low volume again. Only 240,000 contracts since 1700 last night. That might have something to do with it. It's 94% of the expected volume for this time frame, so it's not as low as my imagination has it. Average true range bounced way back up here, but it doesn't seem to be holding that for me. I wouldn't have guessed that. Look at it go. Hurry up and wait, huh? Even this poor iceberg guy can't keep up. He's wandering all over the place over here. Whatever that is. Well, we're 15 minutes to the IB, and I can safely say it doesn't look to me like it's going to be a very target-rich environment here. The range requirement is going to be pretty tough with all these levels stacked up across here. And the range requirement meaning just from my point of view, that kind of defines the risk, you know, potential or the potential success of the trade. Every one of these that jumps in the way there looks to me like it reduces the potential of that trade being profitable. And I hope I'm being logical and not just looking for excuses. But yeah, this is not what I expected for today. I thought there'd be a lot more fireworks around these numbers and everything, but maybe everybody's just in the real extreme hold. Don't forget that tomorrow, in addition to numbers, we've got the Fed rate decision and the news conference. That has not disappointed in terms of volatility for the last couple of times. And if you're passing through the stream, click the thumbs up. It'd be a real honor if you subscribed first, and definitely drop something in the chat. Say hello or whatever, you know. I'm sure Antonio gets tired of just hearing my voice. Yeah, this is certainly not what I had in mind as far as expectation. That's why you should never predict or be rigid, you know. I had a problem the last few days, as I referred to earlier, with this IB trade and configuration that, hey, Richard, what's up, dude? How's England? Good, I hope. Probably cooler than here. That's a good thing. It's already 28C over here. And it's just gone 9 in the morning. Yeah, anyway, back to what I was saying is that, as you guys know, I'm working on vetting only the IB trades. So there are two. And the reason I chose the IB is because it provides a trade option for a rotational environment, and it provides a trade option for a directional environment. So that's one of the few setups that I could think of when I decided this. Plus, it's as obvious as the nose on your face, right? Where's this green line and what time does it set? So I thought those were easy for an old guy. The problem I've had lately is we've been in a real rotational environment for the first hour or so. And in reality, and I didn't take any trades, of course, because I'm sticking to my guns, but in reality, the successful trade was, and that met all of the requirements. I'm not saying just, whipping and spurring, but yesterday there was a very definite IB continuation trade, and it came through it. It tested back up to it. I think I made a screen snap of it because I post them in my Yeah. Oh, man, I hate that. I always do that. So it was a rotational environment right here. You got to remember that this snap was at the end of the day after all of this, right? So the entire morning had been rotational, and I wasn't looking for an IB continuation trade. But this is about as perfect as you're going to get. We came through the IB, consolidated, tested up through it, nowhere to go, back down here, came right up to just below the IB, and then with buyers and didn't get anywhere. Now this is, as I've noted up here, this is a replay of a vetted trade, and I put these snaps in my static journal. Rod has provisioned a missed trade functionality, so you can compare what trades you missed, what's your P&L, for example, what your P&L would have been had you taken those missed trades, and what it is without doing that. So in order to be absolutely as accurate as I can, when I have a missed trade like this, I go back in the period between 1600 and 1700 in the evening, and I trade exactly the trade with my multi-bracket, and I don't touch the bracket the second it goes off, and I trade it. My memory's so lousy anymore, I couldn't have remembered this exact trades, price action, but anyway, this is how I do it. So there's absolutely no heat, perfect IB continuation trade with all the exact rules per my setup. The problem was we had only been doing this, which would indicate, and it, in my setup says I should only be looking for an IB failure. Well, oops, that didn't work. So I got to figure out. Yeah, well, I think there might be yeah. I see that, Richard. Yeah, I can only, condolences would be, I don't want to say anything, that I'm really thinking. But anyway. Yeah, and here we are now. Big news numbers out, up, down, consolidate. And here we are in a tight rotational day. So by definition, I would be looking for an IB failure trade. Wouldn't get anywhere from the top because there's no range whatsoever. There is just barely 60, 25 quarter to 30. So there's just barely a range requirement right down here. I don't know. Yeah, that's, I think these news, this lack of response in the news, first, surprised me, and second of all, I think confirms the fact that really all we're doing here is we're hanging on these microphone boys, like the main man and his elves or dwarves or, whatever you want to call them. This Lutnick guy seems to have developed a real taste for the microphone. Yeah, Captain Chaos is a real good way to put it. That's a good one, actually. I try to be less political and, in the stream, because I don't mean to be or want to be and don't think it's appropriate to be, but it's hard not to be, say, Jesus Christ, what is going on? And the disregard for any kind of truth or, facts in the news is staggering. I think that the big problem we have is all this social media crap and the fact that the news agencies are all internet-based stuff, with no regulation. I mean, they say any damn thing they want to say, and if people believe it, well, go after it. It's crazy. Pretty crazy. Captain Chaos. I like that one. I know Captain's a pretty high rank for that guy, but you know, that's a good one. They do kind of look like Marvel characters, don't they, when you line them all up? And the backstory on a lot of them is just, the cabinet people is just phenomenal. Truly amazing. Well, here we approach the IB low pretty quick. How low can we go? Now they've managed to bring developing value area low right down into the middle of that range. So that range requirement is out the door. You know, that's frustrating. What are we doing on a bigger scale? We are making lower highs and we were making lower lows. And we see what happens here. NQ is, maybe we've got to start trading the NQ. That's got a lot more direction to it. Usually, actually used to do that. That was the market I traded. Oh man, this is disappointing. Wow. Stick to the guns, huh? An interesting philosophy or a line of thought recently in finance stuff to kind of justify this, you know, stocks and market all-time highs and things like that, is that it's confirmation approval for the Fed's decision not to raise rates and to resist all the insults and stuff. Because anybody financially, I'm not that smart or that well educated with it, but apparently those who are all agree that it would be a complete disaster at this moment with the tariff story and the potential and the current inflation and the potential for a lot more inflation. that the reason for, because I'm going, what is with the market and all these all-time highs? Don't they understand this is a problem in the conversation is, well, it's basically they're showing their approval, or that's their vote of approval for Powell not raising rates. Interesting thought. That makes sense too, actually. But it's a point of view I hadn't thought of. I like that point of view. And of course, that that also blends well with the fact that there are a whole truckload of greedy bastards that'll do anything for money. So, any chance they can get to run them up, they're going to do that. And also, I suppose that they're getting everybody so long. As we all know, this market goes up to go down and down to go up. All of a sudden they're going to jerk the rug on these guys and Katie bar the door. I believe, or suppose, I should say. So we haven't gotten through the low, the close, the overnight low, the settlement, or the MVPOC, or the previous IB low. Well, there's a few for you. And we are in the IB statistic mode now. We've gone 930. We are unfortunately rotational, pretty much, in my opinion. And one thing for sure is I'm not going to go, ooh, boy, we're under the VPOC and the mid and the VWAP, and boy, we're going to take out the IB low. I guess we probably will. Got a big bunch of liquidity living down here, or the only real size liquidity. $1.29. Where's 500, boy? Floating around here somewhere? Nope. Yesterday we had 300s down here. I would say that it is a very likely possibility that we will get down through there and take out the IB low and points south. But it's definitely not the... I learned the hard way that, for me, the IB trade is not to anticipate the statistic being hit, but rather the reaction afterwards with the IB higher, IB failure, or IB continuation. And I mean, you guys will certainly remember all the times we've come down here and just gotten within a tick of one of the IBs and turned around and gone and taken the statistic at the other side. I certainly do. Ooh, baby, you, are we going to get it? Are we going to get it? She said. Man, this is a pretty crazy price action around a pretty active week for earnings and numbers, isn't it? It strikes me that way anyhow. And of course, the more I'm within 2 trades of a milestone. And of course, that eats on the back of my head. But I'm very aware of that. Back in late February, I was 1 trade away from a bigger milestone and ended up taking it all the way down and back up to here again. So, yeah. The magic of trading, huh? There was a lot of complications around that. Apart, extracurricular problems outside of trading. But it affects your trading. Whatever happens, your life affects, Life's what happens while you're making other plans, isn't it? Well, and then of course, if you just, if you want to trade the NQ and this is TopStep X, right? Here's 100 points. 100 ticks. No, points. There's 100 points. Points. Oh. Hello. That's what Bangtam and I were playing last night. Went the wrong way. This is a completely different account, etc., and by no means it has anything to do with the typical stream, but interesting to look at. Wow. Unbelievable. Something I very definitely noticed with this fixating on just the IP trades, it's becoming more and more clear to me, and I guess it has to do with, would be a function of my not thinking this through far enough or something. I don't know, but I realize that the ultimate trade decision definitely comes down to a discretionary one. And perhaps that's not right because it's not eating my own dog food. It's not saying that when I vetted a trade and it presents itself, I put it on and rely on the law of large numbers. I guess that's my problem. Well, I don't guess. I know that is, but trying to figure out exactly what that problem is and what to do about it. That's why I continue to. And I suppose by being discretionary, I am not capturing real statistically significant data because that discretionary piece in there on those entries is bad. Now there's the IB at 9:45. Excuse me. There's some buying. Are we getting up? Ooh. We're not going anywhere. However, look at the levels below here in anticipation of the IB failure. I mean the IB continuation, which I wouldn't know what to do, Close, overnight low, and settlement, and the previous NVPOC and the previous IB low, all right here. Does this mean a potential mean reversion for the IB failure? I don't know. I don't know what to think about it. If you look at the trade of the day, if you look at the profile, it's rotational, but the trade of the day has been consistently lower lows and lower highs. That makes it difficult for me. And, which I have forgotten to do, sorry. We've got a migrating VPOC lower. I would expect us to at least test settlement before I would think about a mean reversion. And all of these, I can lean on the excuse that there's no range requirement, but I'm trying to think, who am I trying to kid? Me? I need to figure out what to think about that. In this particular context, I would be real hesitant to go mean reversion long with this down here. And the fact that we are lower highs and lower lows. More or less. What's going on over here? Just a plain 5-minute chart. Anybody saying anything now? Let's see here. You could make the case easily for this being a good IB continuation setup here. We take the IB out, test up, we come down, we test up, don't get up to it again, and move lower. But all of these levels here and this liquidity, now the second I say that, it breaks through settlement, of course. Also, as yesterday, we were rotational until we're not. Now they're expanding the range lower. So that was, I guess, the right thinking. Just a day late and a dollar short. And if it matters, the NQ's falling out of bed, making new lows as well. Where are we over here? Got this MVPOC down here that we haven't tested through yet. Ooh, look at us go. Well, I'm sure glad I'm not. Sure glad I'm not short. Yeah, that sucks. What is this all about here? We got 195 contracts at 14. I guess I can't figure out which way to flip. Maybe I need to think long and hard this evening in my study period about getting rid of this discretionary thing. However, then I also need to try to understand how to make the call on the directional move. I'm going to consider this thing gone. Sorry about that. Oh, that's right. It's Tuesday. It's another TopStep drop day. I forgot all about that. I'll have to look tonight. I got some notification on my other machine over there. Remember I told you, Antonio, that they're going to be doing the TAC's going to be doing information drops every Tuesday for the next few weeks, supposedly. I don't listen to them during the day, but I will. It's during the fast markets, which is that first or second segment they do on the TopStep TV. Got air quality alerts over here today, and boy, I can tell my eyes are about ready to jump out of my head. Well, what the hell is this? Rear view mirror only, by all means. I want to be real clear about that. This in a rear view mirror, I did mention it at the time that technically this would be a IB continuation setup. And I didn't take it. And I guess what I'm going to have to do, I'm thinking out loud here. Feedback is certainly welcome. Is eliminate the discretionary part, which I think is rooted in fear, not wanting to. I've had every trade I've had, I guess, all month, which is not very many, mind you, have been positive. But for example, like right here, I should have just taken that trade. Consider that I am vetted, that these trades are vetted to the point that I need to eat my own dog food and, put the trade on when it sets up and then rely on the law of large numbers in the end. Okay, so let's just analyze this looking backwards. Let's say in here. Let's make it 24.25, okay? There's only 6 points. So, yes, it's scaled, absolutely. But it has not achieved the T2 which is 12, requires 12 points or 48 ticks. So 25, there's 10. Need to get down to the 13s to get T2. Let's see what happens. I'll just leave the mouse there at 25. Of course, the big plus of the risk neutral philosophy is that once you're scaled, you put on your helmet, put your feet up, watch. You become a spectator at that point. Or, I don't and I don't think anybody else does. There's, at that point, then the options and your mind starts thinking about trade management. And I don't think it's unrealistic to think, well, if we've gotten scaled and we've gotten another 3 or 4 points equivalent to a second scale, do I let this thing blow back in my face? Do I trail up to break even? Do I trail up to T1? Those are the things that have to be, and that's where being able to back test with different variables so that you can optimize those ideas, because to do it in a live environment, you'd have to live long, older than Methuselah in order to be able to do that. But if we just took, for example, you're in at 25, you're scaled at 22 here. Now you haven't taken any heat. And let's see where we go. We need to get down here to about 13 in order to have T1 and T2. And from the looks of things, It's thinking that way. Funny how they came down and just tagged out that iceberg, isn't it? One more break, and they've got this $1.75 down here at 15, which came in the market at just before 9. And we have a high volume node down here at 13.5. Remember that these high and low volume nodes are pushed from IRT microcomposite. So that's market generated information, but it's based on my discretion of how I drew that, of how I incorporate the draw the microcomposite. So that's important to know. Yeah, well, I'm pretty happy I didn't short this. Maybe not. Standing here talking with the mute on. I need to address this tonight in the my study time, which is away from the live market, or when I'm participating. The ETH will be open, of course. I don't believe you should make changes to your trade plan during the live market. And these, this was truly the pretty classic IB continuation setup and trigger. But there was absolutely no range requirement. So what do I do? Do I discount that? Do I lump it into more of a discretionary read on the range requirement? This is one day, right? This is one instance. So that's not statistically intelligent to make a decision on that. But it requires thinking about for sure. The last few days, there's been a situation where, and one of the more important things, perhaps more than the range requirement, is to decide about recognizing when we've picked a direction or not, or the tanker's turned, or whichever euphemism you want to use. At this point in the day, none of this existed. So we had been essentially rotational, but that ended, and that's been the case the last few days. We're going to get down here pretty quick, maybe. And I've kind of gotten away from replay trading, unless it's an example like I did showed earlier, that I'm making a specific snap, documented that it's a replay, and for the reasons of illustrating a mistrade in my static journal. But now to go back and trade on replay a couple months ago or something, when you don't remember the day, when I don't remember the day or the price action, that's a different story. But to replay like today and look at this, well, there it is. I'm looking at it right now. I don't think that helps much. I think it kind of deludes me into thinking, well, yeah, I got that trade. Okay, that's no problem. I didn't. And I've got the account to prove it. So. So it's disappointing, and with being fixated and strict about what I'm trading the IB trades, and that's likely not going to come back again today. Pretty darn close. Pretty close. I'd say it won't be long now. 1300. 6413. Sorry, not 1300. Don't forget that micro composite VPOC is just down your blows. And our hypothetical T2 is right down there, and pretty disappointing. It's important to point out that these setups, setup and trigger, zero heat, absolutely directional, except for right here, right? No, but you were well scaled here, so there you go. And there's the previous RTH low, and there's the MCVPOC for the 25th at 06. The high volume node here at about 13.5 is roughly where our T2 would be. My T2 would be. If I wasn't a waffling wuss over here. Ooh, waffling wuss. There's a good one. These are the times when you're scaled, assuming you're scaled, and you start thinking about how you're going to manage the trade. One of the things that is talked about often or considered often is a trail up behind these swing highs, is to lock in some so it doesn't come back in your face. Rod is of the opinion that's a losing situation, and obviously the way to determine that accurately would be to backtest each system over a long data set and optimize for which is the best way to do it. remembering that past performance isn't indicative of future results. But what else have you got? Unless you're at least a junior at Hogwarts, I don't think you can know the future, probably. So the only thing we have in statistics is, only way I know about it is to look at statistics. And theoretically, there's that T2. A classic setup, classic trigger. And no heat to the, what Rod would be doing, or the static fellas, Harry and Garrett and those guys, is after the scale, they would have pulled their target down here to the previous low, for example, or maybe this liquidity. Their T2. And I don't know about their inter-trade management, swing highs or whatever else, but they would be. I generally leave my targets where they are because that is a, oh yes sir, look at there. If you move the targets around, then as I understand statistics, that if you've changed those targets, you can't include that data in your data set. For example, if you move where T1 is, T2, you can't say that I have a 60% probability that I achieve T1 and I have a 80% probability that I achieve after T1 is achieved, an 80% probability that I achieve T2 because you moved T2. It's got to be, you can't change the parameters in the middle. That's when you're trying to vet a trade. If you're trying to put money in your account, then that's where the discretion can come through and you would do that. And that makes sense. But I'm from a point of view of trying to vet the trade, not so much. God, it's already 10:30 almost. Hey, Antonio, it's damn near tea time, home time. Wow. Time passes fast when you're a wuss and not taking trades, huh? I've put enough of those missed trades in my static thing that I'm overdoing it. I'm tired of doing it. I'm just gonna, like, this is a perfect one, just as yesterday was. That's an absolutely perfect IB continuation. The trigger, or the setup, the test, the trigger, kaboom. But, it's like, rear view mirror trading, for lack of another thing to say. I am somewhat encouraged that I recognized it and narrated it at the time, but then am completely disappointed that I, couldn't pull the trigger, or didn't pull the trigger. Look at us go, boys and girls. Here comes that previous RTH low, or this liquidity for sure. Man, oh man, oh man. What a nice trade, huh? 48 ticks plus. So around pushing, would be the trade would be a total of 60 ticks with both targets, but At T2 is 48 ticks. Damn. Damn. Very disappointing. They can't get enough of down. Now something is wrong because on my charting, we have gone through this micro composite BPOC here, but over here we're not down there yet. So I'm assuming that I got this one misplaced because these are manually input by me. This is done by the charting. Likely what happened. No, yeah, I just have to, I must have gotten this misplaced because there's no, even if you look at the chart in real life, you see there's no dipsy doodles. I was going to say perhaps it's moved up based on price action, but no, it has not. And to be honest with you now, I'm going to leave these micro composites alone, but this did overlap here. These have overlapped each other. You know, you wouldn't be out of the scope of reality to have made this one big micro composite here. But I'm going to leave it as I have it because we didn't really actually close this gap. I guess that'll be a criteria I use. So what is that VPOC then? Well, we'll wait till we get down here. Do those later. Here we go. Look at there. Through the previous low. How low can you go? Expected move is 6403.75. Well. Here we go. Man, oh man. What a beauty, huh? Look at that. Beautiful IB continuation trigger. Straight down and out the bottom. And we got the big century number down here, not very far below us, 5 handles down there. What do we got living there? $1.70. Well, I'm certainly disappointed in myself. By golly. But this is the joy of trading, and I try to console myself with the fact that there is no such thing as a missed opportunity. There is only the next opportunity. And the market, until something dramatically changes, which I hope not, the market is a continual stream of opportunities. Not often you see a perfectly identified one like this, I gotta say, but, yeah. So if you're rambling through the stream here and it makes any sense to you, click a thumbs up, a subscribe, drop something in the chat. If having these price levels would be a benefit to you, drop something in the chat. Let me know. I share them freely with the T-Lab and Static and whoever might need them. they push directly from IRT. The way this works in Cloud Notes here, or you could do it on Excel, I guess, if you wanted to, or whatever other kind of charting. You'll get a CSV. It will be a CSV file that is continually updated 24/7 from Sunday night through Friday afternoon, Friday close, in real time from my IRT, based on, this is rhythmic data, market MBO, market by order data, and then however you're in Bookmap's case, this is a Cloud Note column, and you put in the URL to that updating table, and there you go. That's how it works. That's how these work, and this works. High volume nodes and the levels. I typically share the levels, not necessarily the high volume nodes. Nobody else wanted them or seemed to care. So there's that. Ooh, is this double bottom? Is this double bottom? Oh boy, all the bottom pickers are getting excited now. Calling the bottom, baby. That's not a trade that I would say, first, it's not part of the IB trades at all, and so it's not on my menu today. And after this disgusting, I'm going to have to listen to this stream right here. I, have a recollection of narrating this precisely and why I was not going to take it, which I think was just rationalization. And then I'll decide whether I'm going to eat my own dog food, take the next step of dog food dining. And now that I recognize the setup, the trigger, setup parameters and trigger, every time the trade presents itself, you take it. So that leads me into trading as a business, as opposed to gambling or, video game. So first of all, my motivation here is to have a sustainable, long-term trading business, profitable business. I don't need a video game or an adrenaline rush or, any of those things. And there's nothing wrong with doing any of that if that's where you're coming from and that's the way you want to approach it. But in my particular case, this is my business to support myself, my life, my family, whatever. So it needs to be consistent and sustainable and consistently profitable. So in order to approach it that way, you need to recognize that the market is random. It is random environment completely, and that the statistical probability of the next trade is always 50-50. Past performance is not indicative of future results. That's what that means. All of the data that has gone before has nothing to do with the next outcome. That's a statistical fact. So, what do you do? Well, I've talked a lot about this IB, the fact that I'm vetting my IB trades, of which there are two. And I don't think I need to go through all of that story about what the IB trades are or how they come about. And here was my narration of the IB continuation trade. There's the statistic. Here's the here's the proper, actually ideal price action, and then the trigger. Okay, so after you have, so what you do is when you've identified something like this right here, you capture every example of that in your data set, and you determine mathematically if that has a positive edge or not. Probability, outcome, percentage, those are, the words are interchangeable. If it does, then you do that through back testing or however you go about that away from the live market, and you establish that edge or not. Let's assume that we do establish there's an edge. Your job then as a trader in the live market is to take every example of that trade that presents itself, which I did not do right here because I BS'd myself into thinking otherwise. And didn't even react again here, which wouldn't have qualified as an IB continuation trade, but you know what I mean. So anyhow, and I did not do that, and I paid the price. By taking every example of the edge that presents itself, you then rely on the law of large numbers, which is an absolute fact mathematically and statistically, that edge will manifest to your bank account because you've established and identified a positive probability or edge. And the whole key to that is taking as many examples of that as you can, and then that edge multiplies to your account. That is trading as a business. And that's not just something I dreamed up. That's the most successful mathematical trader hedge fund people in the world all know that, and that's what they do. They've all recognized that, and that's how they operate. Jim Simmons, Renaissance Technology, the most successful hedge fund in history. All mathematicians. They refused and never hired anybody from the finance world. Physicists, mathematicians, and all of whom, in his words, had done good science before they were hired. Data analysis and statistics. That's how he approached it. Ray Dalio, Paul Tudor Jones, Tom Sosnoff, and the whole tasty trade world. Mark Douglas talks about it. Trader Tom, the best loser wins guy, talks about it. Tom B in the Traders Lab talks about it. Rod and we all talk about it. I mean, it's from the top to the bottom. That is how it works. And if that sounds extra familiar, it is the exact business model of a casino. They play no game for which they have not pre-identified an edge. Then on the casino floor, their only mission in life is to play that game as many times as they can in 24 hours. They know people will win, gamblers will win, we know we'll take stops. And that's the part where I'm hanging up, is that little, hesitation to take those stops, which I know are inevitable in the business. That's what screwed me right there. So on the casino floor, when a gambler wins, the dealer, the pit boss doesn't run over and shoot the dealer or whatever, change all the rules. They just say, congratulations, you get your money at the cage, and they deal the next hand or spin the wheel the next time or whatever. And that's the secret to it, really. That's the Holy Grail. And that's not just from me. That is a synopsis of it from all those people that I mentioned, and pretty much anybody. You find any successful professional trader and listen to what they say or read what they say long enough, and you will discover that that's what they're doing. They're doing a probabilities game where they take they establish an edge and take an increased number of examples or occurrences to manifest that edge. That's the whole story. And I stand here thoroughly pissed. Here was my T2, and it's gone on another 7-8 handles past that. So there you go. That is how you approach trading as a statistical business. Merry Christmas. There's your holy grail. But it's, I mean, I'm joking now, obviously, but it is the truth. That is the holy grail of trading. Indicators, this, that, all that other smoke and mirrors crap that the, rear view mirror experts and the influencers want to tell you is, look at and just look at the day, by the way. Is there any question in your mind what the context is? Now, I question at this point, none of this happened, right? Yet. So at this point, we were rotational. And I've recognized, and you can listen to the stream the last few days, I have recognized that I need to be better on my game about recognizing or being aware when the context changes from rotational to directional, because that's exactly when, wherever it went, that's exactly when this happened. That's how this continuation trade became valid and not an IB failure trade. So. Yep, take care, Antonio. I'm going to be over here crying in my beer. Jesus, look at it go. We just tagged out the century figure. Jesus Christ. So there would be, had I trailed up, and there's 25 points. With a 1 lot. Mind you, my risk neutral scale is a 2 lot, of course, we know that, but I'm talking about 25 points, even on a 1 lot's $1,200, $150, or thereabouts. Basically 100 ticks, right? And a tick's $12.50, so there's $1,250 on a 1 lot. Yeah, disappointing. It's out of my realm of trading today now because I am focusing on and I don't have a problem with discipline. I probably have a problem with analysis paralysis for sure, but I don't have a discipline problem. Like I'm vetting the IB trades, and I'm not going to start making up stuff and taking other signals and setups because I want to, or I feel FOMO, or I feel whatever. And there's basically 2 chances we're going to get back into an IB configuration somewhere, and that's slim and none as far as I'm concerned. And also you have to wonder how many times can you go to the well, and there's all those cute sayings there. So I don't have that problem, but and I don't overtrade, and that's maybe okay. I don't know. I guess maybe I wish I did. If I were like a lot of guys that can't control that, I'd have gotten short here, I suppose. Which would have been just magnificent. I would have kept it at my original profit targets, but most likely. But what Rod is doing now, and some of the guys in Static are, he got to a point with his trading that he refers to the risk neutral scale as training wheels, and he took that off because he got tired of giving back half his profit. And he is at a point with trading that it is basically reinforced for him to take only A+ setups, and it's working out real well for him. So that's I guess that would be the next thing to look forward to in my journey. But at this moment, psychologically and every other way, I'm real happy to be using my risk neutral setup. What I had done previously was move to the 4-lot risk neutral package, so that you still had the same risk, and the tick sizes were the same, just increased, so you can always just size it up. But so those are things to think about there. And now I'm pretty darn disappointed about where I am in this point, and you need to be real aware of that, so that those little thoughts of FOMO and revenge and things don't come seeping into your mind. And we will never get over, because we're human, we're a mammal, we've evolved millennia or whatever, however long. Those things are in you. They're part of your DNA. That you have fear of risk and FOMO and those kind of things. You want to be right. And you're never going to get rid of that. Point of the story here is you're never going to get rid of those things. They are never going to go away. And if anybody says, well, you need to control this and do this to control that's complete crap. You're never going to get rid of it. What you need to do is you need to recognize those emotions and those thoughts and not act on them. I suppose that is a way of saying that you control them, but you are never going to eliminate them. Much as you enjoy the movie, you're not going to ever be Spock. So that's something that's real important. I'm now thinking and recognizing I'm disappointed up here, and I don't want to have some sort of a revenge or fear or I guess it would be a revenge idea that I missed this trade, so I want to make it back somehow. Very aware of that. Probably too much so, in that I overcompensate, like with over trading or something. I'm sure part that figures into the analysis by paralysis or paralysis by analysis problem, I guess. And remember that this is my journal, so I'm talking to myself here. I'm not pointing a finger at anybody else. I'm going to really look forward to reviewing the stream tonight in this area right here around 9:45, which is an hour and 15 minutes in the stream. I have an app that I hotkey in various predefined, chapters or bookmarks or whatever you want to call them that I've predefined, and then I can also add them on the fly if I want to. But to eliminate me having to type stuff, it's an app that goes in OBS, and then at the end of the night, end of the stream, I add those chapters or timeline or whatever word you want to use to the stream, so that you don't have to obviously listen to 7.5 hours of me talking or dead air or music or whatever else. You can jump around to what you need to do, and that's what I will do. And on that note, actually, If, like me, you believe that journaling is important and you're a donut when it comes to multitasking or whatever else. And I think that anybody that's younger and involved in all of the typical social media and stuff are I think you're all good at doing, watching the market and clicking and typing and doing those kind of things, which I'm just not. And I don't want to develop, actually. So if in fact you wanted to have a similar idea to this, OBS, oh, excuse me. Biscotti went down the wrong pipe there. OBS is obviously, Bookmap and IRT are my charting package, and my execution software, that's IRT, and this is Bookmap. And the software that I use to record and stream this, well, obviously streaming goes to YouTube, but you can do the exact same thing as just recorded locally, is OBS. And it's all free. Pretty amazing. Obviously, Bookmap, don't misunderstand, Bookmap and IRT are very definitely not free. I would love an alternative that was more cost-effective or less expensive for those two. But the OBS piece of it is, so you got to set up, get your mic, and I ended up with a mic and a mixer and stuff like that, but started out with a Logitech G Pro headset with a mic, and that worked for quite a while. So you don't have to go nuts. This is an Shure M7B microphone and a Mackie DLZ Creator mixer. And, you can get as nuts as you want to get, I guess. I just wanted stuff what I wanted to have was something that was reliable, well trusted, and professional to the point that it sounded okay and was enjoyable to a degree to review, So that's why I got what I have now, and I have stand-up desks, so the mic's on a boom, and I don't have to have a headset on all day, and a lot of personal things factored into that. But OBS is free, so if you think that this would help your trading, and there you go. Certainly welcome here, and of course, but I'm standing here trying to imagine what setup could occur that I would think would justify an IB type entry here at this point, and I can't think of what it would be. And I've discovered that typically the RTH1 period is very definitely the more target-rich environment, I believe. Having said that, though, the last couple of days, yesterday is a prime example, the IB continuation set up perfectly, just about as cleanly as this, at about 12:05 yesterday. Go back and look. It's in the stream. It's in the stream. So that would be, 2.5 hours in. Three, I guess. Four hours in. And I wasn't here. I had been, standing here and finally thought, well, okay. Went to have a bite of food, and there you are. These are standing desks. I don't even have a chair in here. So I start about 6 in the morning and go through till, say, 9:30, 10 at night. Makes for a long day for an old man. And then when you have the frustration of something like this, that not only did it occur in the market, but that I stood here and narrated the thing and didn't take it. Man, that's like I need an electric shock pad under my on this rug I'm standing on. Something. Tom had jokes about having a thing. Well, first he has an error cost calculator, which some people you can make in Excel, of course, and some other people have tried to fancy up and recreate recently, I believe. And then and another thing that he said he used to do was he had a big thick rubber band on his wrist, and whenever he'd make an error, he'd snap himself. So I guess he was working on Pavlov's dog, conditioned response idea. Not sure that I would recommend any of those things, but the error cost calculator is obviously the similar thing to what Rod has done with missed trades, which I think is really good. And I have it in my own local private journal, which I've kind of let slip now because I'm doing the stuff with the static. But when you look at your P&L and then you add in, the way Tom did it was he said the error cost calculator for every error you made or trade you didn't take, which would be considered an error, that you would put that missed profit would be a cost. This is how I understand it anyway. And so at the end of the day, or the month, he would see how much money those errors had actually cost him. In Rod's case, it's kind of the same thing, only you see where your P&L is, and you can add in remove that filter for the missed trades and see the difference, right? Same idea. Well, now we're having the pullback in the downtrend. Back to developing value area low, which is a high volume node, which is a, I don't know what. And we've got, everything is falling below us here. We've got the mid's way down here, which means we've had a big extension to the downside. Just kind of going around the horn here. Here's our VWAPs and POCs are lined up. It was real interesting yesterday. I didn't take a snap of it. It's in the stream, of course, but we only had 2 VPOC migrations all day, and they were within about 1.5 points of each other. The whole trading session, RTH trading session. And today isn't a hell of a lot different. There's basically 1, 2, right? 1, 2 buck. Well, here we go. 1, 2, 3, 4, 5 so far. Yesterday was 2. Pretty interesting. Yesterday was light volume. Today, not. Quite the contrary. Today we're 113% above average, or, in other words, 13% above average for this time in the RTH market, in the RTH session. The SPX. Open interest on the ES, harmonic rotations. I still haven't figured out exactly what to do. The reason I was thinking about this and the ATR, there are several trade philosophies out there where you base your stops around the ATR or the harmonic rotation. Different people, different ways of looking at it. I'm sticking with the way I have it because that's how I'm vetting my trades. But I certainly I'm not saying that's, it's my way or the highway. You know what I mean? And even when I talk about or describe how the risk neutral trade philosophy package and everything is set up, obviously, again, while we have some time here, this is the basic risk neutral package. This is the smallest risk neutral package that you can have because you need to have an even number of contracts. That's how the whole thing works. And the stop for the entire package is at one level. So this right here, and the minute you've determined this, it automatically dictates T1. T1 has to be the same tick size, but in the positive as the stop and for half of the package. So what I was thinking about with ATR and harmonic rotations and stuff was how you optimize the stop loss size in ticks. That would automatically dictate T1, and then T2 is discretionary anyhow. But that's where I was going with that whole idea. You can't change these around while you're capturing the data to vet the trade or the setup. Of course, because then it wouldn't be, they would not be statistically significant within the same data set. And if you want a real simple way of thinking about it, it's apples and apples. You got to compare apples and apples. You can't compare apples and oranges or apples and watermelon. You got to compare apples and apples. So that's, that's a fundamental way of saying statistically significant data set. Once you have identified the base trade and are confident that that has, you know, as I am pretty much at this point, and why I didn't, is why I'm so mad at myself for not taking this. Then you can start doing the stuff like I was discussing earlier with trading up to lock in profit and doing all that kind of stuff. But the minute you started doing that, with your T1 or with your stop or with your T2, then you've removed that particular trade. That trade cannot be included in the data set you're using to vet the setup. And I tried using like backtest PY and teaching myself and using Python, and I got to where I had some stuff kind of working, but I then discovered, wow, why aren't these numbers looking right? Crazy values. And I discovered by going to the stack up thing, they are not designed for futures. All of those are, I think most of them were originally created around, you know, crypto stuff or FX, which is moving in pennies or whatever. So you couldn't get a value out of them in futures with tick value and 4 ticks to a point and all that stuff. And I figured out a way to utilize the backtesting features in IRT a bit. So that's what I'm trying to do now. There is a futures-based backtesting for money, you know, for pay thing called Quant Connect. But you have to know Python well to use it. It's not just plug and play, easy, you know, menu-driven kind of thing. And I tried to monkey with it a little bit, and I realized I have a problem going down rabbit holes. You know, I want to backtest the IB trades. And I want to have I want to vet or have a statistic. Does that have a statistical probability or edge or not? And then I spend 6 months teaching myself Python, which is not the point. I have to be, that's another one of those things about myself that I have to be really aware of. I'll end up down a rabbit hole and go, what the hell what am I doing down here for? You know, same idea. And so I just quit using them and was able to figure out a little something in IRT, which I had started before. Rod and guys that are good coders, that's sweet. You know, if you can do that efficiently and well, that's great. And it's a hell of a lot faster, I'm sure. That's why the bigger houses and the Tom Sosnoffs and the Citadels and all those guys have, not Sosnoffs, but the Citadels and PL have literally thousands of programmers and code guys. You know, deep back end support for all the statistical side of life. I don't know, thousands plural, but 1,500 or whatever I've heard brandished about. Okay. A little run around the park here. This is IRT, 12-tick Renko on the ES. The NQ Mini and the ES Micro Composite and the ES, excuse me, Market Profile. Here's our, now this is the day session. So this is yesterday's RTH trade right here. Then there's the overnight in the middle of all this. And up here was our open. A close, a little bip up to the high and down we go. Interestingly enough, as I was pointing out a couple of minutes ago, we've only had 2 migrations in the VPOC so far all day. And yesterday we only had 2 not so drastic migrations in the entire RTH session, which is real atypical, not typical at all. You would imagine, or I would think, that we'd get a migration down here pretty quick. But the way to tell that is very boop, boop, boop. The way to tell very, very simply and very accurately, again, these things are all just math and numbers. The POC is just marks the price at which the most contracts have traded so far in the session. So far at 64.31, we have traded 8,394 contracts. Oh, I'm sorry. 8,775 contracts. Okay. This yellow here, the muted yellow is a full session. And you see that here at 94.445. And this brighter yellow is the RTH. And that's the one here at 87.75. Okay. Now, what do you think is going to happen? Well, right here we have 8,298. So 500 more contracts, 400 more contracts. And this POC is going to migrate right down here to 64.1275. It's just academic, falling off a log simple, you know. And so many people go out of their way to try to make this all so complicated and mystical. It really irritates the hell out of me. But that's why I probably go over it too much or oversimplify it. It's just basic stuff. I don't have any indicators on either my charts or book map, unless you would want to consider that the volume weighted average price for both Globex and RTH is an indicator. And yes, it is. It is calculated. So by extension, it's an indicator, or by definition, I guess it's an indicator. This is, but this is simply the price weighted by volume. There you go. None of the rest of it is. And of course, you know, if you want to get into options and implied volatility and the Black-Scholes model, yeah, you can go down as many rabbit holes as you want to, mathematically or any other way. But none of it's magical. You know, you don't have to wear a pointy hat or have a magic wand or know all the phrases from Harry Potter. But what we do here in the futures market, and one of the reasons why I was drawn to and feel comfortable in the futures market, it is a regulated, transparent exchange where all things come through that exchange. It is not a situation where there's a pool of stock like the New York Stock Exchange and there's a bunch of, on floor, whatever they call them, specialists like Tuckman and those guys that they can see everybody's book, but you can't see anybody's book, so they can front run you or they can do whatever. Not the case in futures. Futures is, by definition, a contract between a buyer and a seller. Futures is a zero-sum game. When you hear somebody say, "Oh, price went down because there was more sellers than buyers," you should just turn them off or turn around and walk off. That's absolutely with futures. That just shows their stupidity on their sleeve. There is no such thing as more buyers than sellers. It's impossible. How does price move up or down? Aggressive. If they say there's more aggressive buyers than sellers or sellers than buyers, that is correct. What does that mean? This is the dome, right? This is the market. This is the inside bid. This is the inside ask. Other way around, I'm sorry. Inside ask, inside bid. Well, for price to go down, sellers have to come across the market and hit the bids. For price to go up, buyers have to come across the market and hit the ask. Aggressiveness, that's what moves the market up or down. If anybody says to you there's more buyers than sellers, you can tell them, whatever, pick your insult of choice. But that's not true. Anyway, so here we are in just a hole. I am very disappointed, as I've said about it ad nauseum, and I promise I won't say anymore. That I narrated and did not take this trade, which is one of the two trades that I have been vetting for a month and a half now, almost 2 months. I had a target of the end of this month to reach a certain threshold. I'm 2 trades away from that. This trade today would have put me 1 trade away from that, and there's 2 days left in the month. Now I have to now reassess. Do I reevaluate my target? And I have to be extremely aware in the next 2 days not to push something, right? Because I want to make the target. You know what I mean? Got to be aware of those things. Or I do. Nobody else has to be aware of anything. Remember, this is my journal, which I share, and I am talking to myself most of the time. Ooh, here we go. There we are. There's the switch. You see that? I noticed it and then just started to say it before the line moved. Well, there's our VPOC migration lower. What does that mean? Well, what is the definition of the VPOC? It is the price at which the most contracts have traded in the session. What does that mean? That means this is the price at which the most buyers and sellers interacted, came to a meeting of the minds that this was a fair price, however you want to look at that, or analyze that. But that's what it means. What else does it mean? It means this is the most likely price to get your ass handed to you if you try to trade out of here from the middle out. That's the old, don't diddle in the middle and all those kind of things. Because it's most likely to trade one way or the other. And remember, it's a random market, and the probability of the next trade is 50-50. And the only way the market moves is up or down. Horizontally is what we put on it with time. So there. Something else to bear in mind here is that this is our developing value area high and our developing value area low. The value area is simply that area within with between this price and this price. 70% of the volume has traded in the day, and they call that the volume area. It's actually one standard deviation, so it's actually 68 point something, I think 8 or 6 or something like that. But pretty much everybody, and I use 70% for this for this here because of the other people that use these levels. And you can see that over here, divided out by the IB high and the IB high and the IB low, and these colors. So this is where 70% of the trade has taken place so far. People call that value. Over here in market profile world, same story, and that's where all these things came from. Market profile didn't have these volume profiles on them. In the beginning, it was only market profile. Value was where 68.8 or 70% of the value of the trade took place. And then there's all kinds of sayings that come out like, well, we're building value overlapping and lower today because here's yesterday's value. So we're overlapping and lower. There's all the theory being that the willingness of traders to trade with each other indirectly confirms an agreed price or value for the product. In this case, the S&P 500. Did they agree that the market was going to be going higher, or did they agree that the market was going to be going lower? Today, they agree that it's going to be overlapping and going a bit lower. If you want to look at where we're trading right now. And you can tell that easily by the way I do the flagging. Here's the value area high. That's from yesterday's RTH session. And here's the value area wherever it went low here somewhere right there. Yeah, highs up here and lows down here. Sorry about that. And so it's now moved, right? And that's how it works. That doesn't make any sense. Looks like that value area number's off to me. The value area low number is definitely off. Because here's the value area low from yesterday. And it is definitely not above. Oh yeah, here we are back down where it belongs. I don't know why it does that sometimes. I've noticed that with the value area low bops back and forth. I don't know why. Anyway, who cares? Never mind. Doesn't matter. Not taking the setup and making both targets is the problem, not where the value area flag is in relationship because of IRT and bookmap. I don't think. This is the back testing setup with IRT. And what I want to look at here is, this is today. IB high, IB low, migrating VPOC, the yellow guy, just the way I have it on Bookmap. So here is, and here's the clock. Here is our, get rid of that damn thing, slow stuff down. Here's where we put in, this is a 5-minute chart, by the way. Oh, I'm sorry, it's a 1-minute chart. Excuse me, all the pieces. Here is the IB statistic, parameter, the test, and the short, right? The IB trigger right there. Now, I want to see if, the way I have this coded, the IB continuation shows a trade there. Okay, and the way this back testing works is the following. What is going on here? Okay, the way the back testing works is it's a little bit different than it is in the multi brackets in Bookmap or a lot of places. You set up one trade, the IB or the RM2, which is what risk neutral 2, which uses 2 lots, and I've shown that a couple of times. But in programming or coding the actual rules, you have to do a long and you have to do a set of short rules, because Bookmap, for example, it's clever enough to figure out, well, if you go short, then your profit target is going to be negative numbers. If you go long, your profit target, for example, is going to be positive numbers. You know what I mean? So it's that isn't the way it works over here. So I've coded up these various rules, and what it does essentially, the only thing that I need to change on these are the entries. One for the IBC, one for long, one for the IBC short, other way around, sorry, short, long, short. And the stops and the targets, T1 and T2, for both long and short remain the same. And this is the end of day. So in other words, if you're in a trade and you get up to within a specific period of time that I have set before the end of the session, it automatically closes the trade if you haven't hit a stop or a target. And then this main just sets some flags so that it knows when it gets to T1, it knows if it's just going to close out 1 and we're going to continue on with 2, etc. And it works, okay? So what I'm going to do now is, there's 2 ways you can do this. First of all, you got to set up the back test. And I'm going to make it 1 day. Or let's make it 2 days. Ooh, 2 days. It's the ES, it's 2 contracts, it's this session. These are the different reports I want to have it to come out of the back test. And then I say, okie dokie. Now there's 2 ways you can go. You can run the back test, which we'll do in a minute, or you can do what I'm curious about, which is send these signals to the chart. So there we go. And it did it perfectly. And I'm so pleased. This just shows some colors and some things, and that we set up the IBC and on this chart, okay? And there we are. So it perfectly read the IB continuation signal and trigger. And there's T1. And there's T2. Cool. So that's nice, you know? Yeah. You don't know how long it took me, and well, anyway, it's a long story short, but it took me a little while to get T1 and T2 to work with multiple targets and only one stop. And in fact, the newer support guy at IRT said you couldn't get it to work that way. That's why I always want to test it, because I tend not to take no for an answer a lot of times, and but I always want to be sure I'm not shooting myself in the foot. And of course, this only has importance to me, so it isn't going to hurt anybody else. Now, the next thing you might want, and if you want to see what it would look like, ooh, that's today, and here's yesterday. Also the same. And you see where we got short? And there's where our T1, and there's our T2. And Alice here, or Karen here, didn't take either one of them. Jesus, I got to get it. I mean, that's ridiculous, you know? And there's another one over here, but Karen didn't take either one of them. And that's not good. Yesterday and today, I would be over my target within my date parameter, and I would be a very happy person here at this point. Here's also another one. Now this one, here is a trade early on, right at the IB set. This is good to notice for you. And this is a T1 and then a stop. So it's the one thing I've not been able to figure out how to do, and I'm not going to go back to support because they're, yeah, I'm not going to. It's a real shame that Chad Payne is gone. Let me put it that way. It only looks at the outcome of the last trade, the last target. It doesn't add together. I mean, I can't get to the code behind this indicator to attempt to change it. So for example, here it's only plus 48. It's actually plus 60 because we got plus 24 here, plus 48 over here, you know? So the next step then is you've already set this stuff up and you can backtest it. Now watch this. Boop. Well, it took a second to run the backtest. There would be the net profit. There's 3 trades. 12 trades where shares were traded. That's how much money. Net profit for the day, capital required, on and on and on. One of the first things I look at is this one to make sure that there's no losing trades. That's correct. And the largest winning trade is 750. That's correct. It can't be bigger than that with the 2-lot package as I have it defined in the rules. And there were no stops. So there you go. The next thing you can do is go over to this report, and these are all the rules and as they've said or not, and you can see exactly the trade day, the time, the entry or not configuration, and what happened. Well, here we got short, here we got T1, and here we got stop. So it's a scratch. Then we got the short entry again. We got T1 and T2. So we got our profit target. And here is the next one, which was another short, and that's T1 and T2. That's how the back testing works. And of course, then you can do as many days as you want. And because it is set up with these rules, I can change that around. One of the things I was working on lately was a trailing stop, so that after T2, because that would be kind of the next logic, I think. After T1, let's say after we achieve T1 and price goes another 12 ticks, or, you know, just picking a number out of the air. At that point, trail a stop up to T1 or trail a stop up to entry. and see how that plays out. See what how your numbers work. Optimize that. Now, that's more of a guessing game, and this is pretty clunky software for doing that, but this is what I have, and this is what I've been able to figure out to do and how to use it. So there you go. Then I'm happy to share these definitions. If anybody else has got IRT and they want to do this, let me know in the chat. I've done it with the static guys and whatever else. And when I share the chart definition, you get these rules. So there you go. Help yourself. And here we are back at the ranch. What's happening now? Well, we had a pullback and short. Pullback. Did we go short? I guess in theory, if you did get short, you're pretty happy because you're at 6 handles down here, so you're scaled. And the main thing that I need to reinforce for myself, it's that risk neutral scale that makes a huge difference for me, psychologically and every other way. Now, a couple of days in a row, I have gone to eat or something at, over the lunch hour, because I've never been too big on trading that 12-to-1 spot, even though there's the 12-to-1 statistic and all that stuff. And like yesterday, I stand here, and I finally say, oh, to hell with this, and I go. And literally 10 minutes after I walk out the door of the office, a similar setup right here, and down we go. And I didn't even narrate it because I wasn't standing here. And that's actually better because I'm not just, I didn't just Karen out on it. Here, I just narrated it and didn't take it. That's really no excuse for that. I like Captain Chaos or the Chaos Crew. That's a good one too, because they're all pretty much in the same kettle of fish, I think. Okay, so here we are at a place where a statistic that Rod has been and guys have been working on is when the when the VPOC migrates outside either way of the IB. And in this case, then you've got the mid and the VWAP right here, and that would and the value area low and a bunch of other stuff. That would be an area to expect. I'm trying to remember where that statistic is. How many times price reverts back to the VWAP or the VPOC, etc. It's not what I'm betting, so I'm not going to trade it. But what I do is watch them and narrate them. Okay. This would also qualify as one of the VPOC migration trades. I'm not particularly, those aren't particularly good for me. What is going on? Whoa. Wow. All right, I'm going to step away here for a few minutes, and good luck musicking, and take a run around the charts real quick. There's that VPOC migration lower, and what are we going to do now? Who knows, eh? NQ's been pretty much a one-way ticket. I noticed this same behavior yesterday. This little guy was trailing him up right about the same period of time. Obviously, it was a different environment, and it turned into a nice classic IB continuation trade. But I noticed this algo tracing these guys up, or this liquidity. Not saying that means anything. I'm saying I just noticed that. That thing is so irritating. Well, what did we do here? Exactly nothing. We continue to rotate around this VPOC, huh? It's actually not been so bad if you're... There's been at least range on either side of it. Not any kind of thing I'm in, you know, would be doing at the moment, but I'm betting the IB trade, so this is, you know, interesting, but it doesn't do me any good. There's the session so far. There was the IB continuation trade. Magnificent. Here we have a VPOC migration. Not so good. And here we go. A tighter consolidation. Coiling up, you know, shorter rotations. What's that mean? I don't know. Means we're heading into the power hour. Seems like the market has moved more than 30 handles, 40 handles today, doesn't it? I mean, at a dollar high, we can barely keep them all in there. I guess we still can. Yeah, so 64.40 to 64.01, 40 handles is all. Wow. It seems to me to be more volatile. But it's not. And again, very, very quiet with regard to VPOC migration. And they're pretty happy with it down here. Look at there, 18,570. That's damn near double anybody else, any of the other levels. So today was a real disappointment on my part with the narrating but not taking the IBE continuation trade here. And tomorrow being Wednesday now starts the real news reports, earnings. Tomorrow's the Fed interest rate decision. And Friday is, of course, non-farm payroll. The first Friday of the month, every month. So Friday is the 1st of July. Whatever that is, August, there you go. So we've got 2 minutes to the power hour. Interesting how they're just shut it off at the expected move, isn't it? These moves were put in. I mean, I calculate and put these in the daily moves every night, just while the market's closed. And the weekly, of course, is once a week. But funny, huh? I'm not saying that is any magical thing, but it is always interesting to me when you do something well in advance and then the market seems to just respect it like nobody's business. It's interesting. these expected moves are, I mean, they do have a lot more credence than a moving average, for example. They are they're based on implied volatility. And the options straddle, not the money. And the options world is a big participant is for futures. Futures are essentially what I think probably one of the larger, I don't know this for a fact, but I understand one of the largest group of futures traders are options market makers hedging their positions, or options trader hedging their position. And there we go, the 2 o'clock hour. Or power hour as they refer to it. Excuse me for yawning. After my RTH 1 and the IB is over with, it's kind of anticlimactic for me, especially when I missed that perfect setup. I don't mind missing a setup if I miss them, but when I stand here and narrate them on the stream and fail to act, that's pretty serious as far as I'm concerned. That's a pretty bad deal. My workflow here, in case you're new, I put this indicator, just a horizontal line, vertical line, at the start of each session. And then the idea is I keep the entire session in view here until I am at an area that I'm expecting or anticipating to engage with the market. And then I can zoom in, right? That's the whole idea. To give me make sure I'm always rooted in and have a firm feeling of context, which is the most important thing I think there is. These are the session prices, which push automatically from Bookmap, and they're updated continually, real time throughout the day, and I start pushing these at 1700 on Sunday nights until market close Friday night. If you're interested in having these levels, let me know in the chat. And if you're just cruising through, smack a thumbs up and subscribe, or spend money, or something. Shoot up a flare, drop something in the chat, something. And this is my virtual journal. The idea being I'm just capturing everything on my screens, and my voice gives, or my narration gives an insight as to what I was thinking. And that way I don't have to be screen snapping and typing and doing everything like that that's necessary to keep up a journal, and I believe it's important to keep a journal. In addition to that, there's no question about accountability, and it is absolutely transparent. I take no trades at all whatsoever in this account off of the stream. And that's the reason that the streams are so long. I start with the pre-market at 8 o'clock in the morning and analyze the overnight or the ETH, and then pre-market and various setup and all those kind of things in anticipation of, and then we start the narration with off at the open. And the stream continues through the day until about 1500, which is the cash close. All the times here on my charts or that I refer to are Central Standard Time. This is my flag column where I change the title each day to the open type. And I think I need to change that right now, as a matter of fact. No, it is open out of range, that's right. And these statistics are dictated by the open study, and these are the associated prices. So this morning, when we opened, there was a 77.4% chance that price would revisit the overnight high, etc. That's how it worked. %80 chance that we would revisit the overnight volume point of control, and there we did, right at the open, and down we went. And then these other price levels, and these are the migrating volume points of control through the day. They scroll off the screen, obviously, when you're zoomed in, so I keep a record of them here, and I know right where I am at all times. This is the RTH volume profile, the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. These are the high and low volume nodes, which are pushed from IRT to bookmap, as are these session prices. And this is my micro composite column where I manually enter these various important levels. My workflow is that once a level or a point of interest has been revisited, I change the text from white to black or red to black. This is IRT. This is the micro composite column where those high volume nodes and various things come from. This is just a chart of the daily RTH session, and these are daily bars. Wherever the price overlaps, I continue to draw a volume profile around there, and that then generates a volume point of, or MC volume point of control, and this is scooted off there. There we go. Micro composite volume point of control, and these red and green lines are the high and low volume nodes, which are pushed to bookmap, as are these session prices. And this is the ES, this is first of all the ES E-mini, NASDAQ E-mini. And then this is the ES market profile. And I also plot the micros, same setup exactly, and push those levels also. I don't know how we can be at a higher volume when we're only at 800. We must have fallen off somewhere along the line. Still says 107% in the RTH session. This is in the RTH session at this period of time. Okay, that's the difference. This is the total volumes from 1700 last night. Typically, that's in excess of 1.1, up to 1.3 million. So the overnight or the ETH session was light. And what else? They continue to wind it up, baby. Look at these swings. Boom, 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 boom. Just like a winding that spring up. Something's either going to pop or break, I guess. Now, it's worth noting here that this, when I zoom in like this, even though I'm $1 high over here, one of the trades that has been identified and taken up by a lot, Rod, Tila, or Static guys and myself, are these deep V reversals here, especially to a liquidity. Now, be sure you remember that, I mean, what's important there's a pretty big sell-off here, right? So when you have this big V reversal, maybe doesn't look like it's a good opportunity, but in reality, look at what we've got here. This is 6401, say you got in at 6402. That's 10 points in just that move. And which would not be the second take profit target, but the pullback would not be any heat, and definitely onto the take profit. So it's important to remember that these big moves can make other moves which are significant seem less so. And again, I repeat myself, but I am vetting the IB trades. Here was the IB continuation trade, which I narrated in the stream here. Go back and look, about an hour in, and did not take. And it absolutely no heat onto both targets and then some. Disappointing, very disappointing in myself. Because I'm not eating my own dog food. Which is the principle that once you've identified a setup and the criteria that validates the entry, you capture a significant data set statistically for that setup and that criteria, and identify if it has mathematical or real edge. If so, you take that setup and criteria whenever it presents itself in the live market. And that was right here. I didn't do that because I was making a discretionary decision that these levels were bothering me here. These are obstacles, and so that would not have qualified with my range requirement rule, which I have kind of put it to a optional rather than mandatory in my trade plan. And that bit me in the butt really hard right there. The risk neutral plan is real simple. Or the risk neutral trade management system is real simple. The minimum risk neutral package is 2 lots. You have to have an even number of contracts. The stop for both contracts, or in this case both, or the 2 contracts, or the entire package, is at 1 stop location. In this case, I have chosen 12 ticks. This dictates that the first take profit target is at positive 12 ticks, or opposite. If it were be a short, it would be negative more. In other words, it's in the direction of the trade and for half of the package. And then there's a runner. The minute you've achieved this first take profit target, the trade is risk neutral. And the worst that can possibly happen is a scratch. And it scales up beautifully, and 4 lots, 8 lots, whatever you want to do. Now, you can't get any smaller than this. So if your risk tolerance and your account size dictates that you have to have less risk on than 2 contracts in the E-mini, then you need to drop down to a micro. And you might want to increase the sizes, right? For an example, 2 contracts in an E-mini is would, in terms of dollars, this stop would be 24 ticks. In terms of dollars for your account, that's $300. So if you need to stop that down or lower that below $300, you've got to go to a micro, which is 10 micros equals 1 mini. So you could do 10 micros and 5 minis, 10 micros and 5 micros at the first stop and the balance at the next. And that would be cutting this risk in half. And so on. If that's clear, I hope. Minute and a half, we round the corner in the final home stretch. Wow, 34 degrees out there. Oof. Or 94 if you're Fahrenheiter. So, yeah, the next thing that's going to happen would be the 1450 for the market on close orders. They used to have a real significance, but this week there's a lot of atypical circumstances, and then, you know, everybody must be aware that we have a random risk potential at all times in the market, which we never used to have before. So that's, you know, scary from a project management or a project management point of view, because one of the first things that you want to do immediately in a new project is identify the risks and put together a risk mitigation plan. But in this case, we can't really do that because, you know, it's all based on tweets or, you know, being within shouting distance of a microphone or camera seems to be what. And it seems that some of the folks there are becoming more and more friendly with the camera and the microphone. I would say God is not all of them, because then that would be a real mess, right? But I'm not sure when POTUS is back in the country here. I think he's still in Europe somewhere, I believe, which gives us a certain leeway because of the time frame. So that's a little bit of a break. Tomorrow's, you know, and as I said, or I hope, you might not have been around, say it again. We have a big news week and huge earnings week. There are 18 three-star news events in the next 3 days. Well, counting today, 4 days. Culminating on Friday with non-farm payroll, which is the granddaddy of them all. And tomorrow is the Fed rate decision and conference and news, whatever you call it, press briefing or press conference. So today was jolts and consumer confidence, and can you tell where it happened? Nothing. It was basic nothing. And in all fact, the reaction seemed to happen about 2 or 3 minutes before the report came out. So that's a bit suspicious. There we go. Something's going on here now. It's only 35, but something happened. One of the things that I don't think I'm paranoid or certainly a conspiracy theorist, but I think any prudent person will wonder, with the current sort of lack of regard or disregard for, reporting facts and making statements that are factual and accurate on the part of the administration people, makes you wonder how much tweaking or massaging they're doing with the numbers now. And that's pretty alarming, actually, to me. And it could be that I'm not the only person that's thought about that, and why we're having what appears to me to be quite a diminished reaction to the numbers. So what's this about? Well, let's check the news. Anymore, what I do when I see, based on the random risk threat that is afoot nowadays, anytime I see a rather unexpected move like this, which would typically be news or report, rather than even think about trading, the first thing I do is get to the news. Now, oh, and that's it. Advisor Hassett, whoever that is, just concluded his remarks on Fox News. So you can bet your ass. You can bet your ass that he said something. And here you go. It's about the AI chips. Now, there was a restriction on exporting the AI chips, specifically the H20. And last week, they green-lighted NVIDIA to export to China and sell these chips. And then they say this. That's kind of one of the problems, I think, nowadays is, well, for sure it is for me, is the contradictory statements by different members of the, of the administration. They seem to be 180 out of phase with the policy that the last guy said. About 3 weeks ago, one of the major additional tariff penalties on China was because they were buying oil from Venezuela. Last week, we green-lighted Chevron to resume pumping Venezuelan oil. To me, those seem like diametrically opposed opposites, the same way with these chips. And I don't know, I'm not stupid. I'm certainly not, Jay Powell or one of these infinitely intelligent finance folks, but common sense is common sense, right? If we're gonna penalize somebody for buying Venezuelan oil, how do we justify an American company buying and pumping Venezuelan oil? Isn't that breaking our own sanctions and policy? Seems like. Same way with the H20 chips. They're banned. We're not allowing the wafer manufacturers in Holland to, or in Amsterdam, to sell the machinery to China and all these kind of things. And we want the fabs to be built in America, et cetera, et cetera, et cetera. And last week they say we've green-lighted NVIDIA, or a week before, green-lighted NVIDIA to sell and export those chips. Now today, this fellow, who I don't, I couldn't picture his face, they want China to buy our chips from NVIDIA. Well, what do you suppose China's going to do with the first 5 chips they buy? I mean, it just doesn't seem like these policies are necessarily well thought out. And as a result, you see what's happening with the market. That's, those are the kind of things that I think that keep me up nights in this environment. And another reason why I am so fixated now on, meticulously and very strictly vetting the IB trades, the 2 IB trades. One of the reasons is there are 2, right? And one is a IB failure, which by design is a mean reversion trade, applicable then in a rotational environment. And the other is an IB continuation, or a trade that is applicable to a directional or directional environment like we have today. So you could trade both sides of a typical market with that one setup. And when I go to vet the next one for my playbook, that's the same idea I'll be looking for. Likely that would be the VWAP to VPOC, which would essentially be like here, VWAP to VPOC. The problem with that trade is, for me, it doesn't have enough meat on the bone, right? Because my basic trade is that 2-lot risk neutral package. It can be scaled up to 4 lots or however many you want, but the first risk neutral scale is at 12 ticks. Okay, that's easy right there. But the T2, which is the meat and potatoes that gives you the return on the risk, is 48 ticks. Well, if you've only got another, 5 or 6 ticks to the suggested target, which would be the POC, that's not enough meat on the bone. So there you go. Mean reversion is also a good one, but it is strictly mean reversion, right? It's not one for a directional market. Yeah, they are. The inner workings of the beautiful mind. Maybe not. Maybe not. The cloudy mind. Okay. I'm sure disappointed about today because I've just got 2 trades about or so to hit a self-imposed target milestone, put it that way. And today would have been just lovely. As was the day before and the day before that. But today was actually the day before and the day before that, I very specifically narrated the trade, and they did not qualify in terms of the context of the market at that time. Okay. Today did, and I narrated specifically the setup, parameters, the trigger, and didn't take the trade. So today's particularly disappointing. And what those are, if I guess it doesn't matter. Well, we've only got 4 minutes here, so let's keep an eye on this market on close orders and see what in the hell happens now. What will these jokers do with this? Okay. Now, think of this statement right here. This is a senior White House advisor. The number of deals is very close. We're just waiting on the tariff rate. How in the Christ could you possibly have a deal about tariffs if you didn't have the rate established to negotiate? I've almost made a deal to buy this car, but we're waiting to find out what the price is. Jesus, you know, I mean, I'm sorry, but does that strike anybody else in you know, within hearing of my voice, that doesn't make any sense? I don't know. Maybe I'm wrong. I hope so. I try to always approach everything from a point of view that I'm the one that doesn't understand, and then try to reason it out and confirm to myself. I don't ever want to be that guy that thinks everybody in the band's out of step at him. You know what I mean? And here's another one. The China deal has been pushed off again for another 90 days. So I hope that what they're looking for is a graceful off-ramp from this tariff story, and just, you know, let Trump have his self-proclaimed victory and move past it, man. Get back to where we were. You know, you gotta, if you just run the clock back in your mind and remember that we had a deal, a tariff free trade thing negotiated and signed and put in place by Donald Trump. Important to remember that, with Canada and Mexico. And the tariff has always been about 10% with Europe. But the dollar was, 20% stronger than it is now. So there is not a 15% net tariff. That is not correct reporting. It varies all over the place, to do with cars, pharmaceutical, whatever. Anyway, assuming that it was fixed, the dollar has depreciated about 20%. So we've gone from 10% to 15%. That's a 5% increase, but we are 15% in the hole as a country, cost-wise, because of the devaluation in the dollar as a result of all this uncertainty. That's the stuff that doesn't get put out there, and which people, here we go, non-farm, here we go as 1450 now. You see some liquidity coming in there, but there's no action. This used to go 5-6 points. No movement on the market on close orders. That's pretty crazy. That's really crazy. And in a minute we'll have the here's that lack of movement. Sorry, I had the screens wrong. Nothing. This would be zoom normally. And here are the wow, this is really muted. 81 million sell side S&Ps, plus 33 million buy side NASDAQ, minus 299 million in the Dow 30, and the Mag 7 is minus 206 million. Now, just as an example, a couple of weeks ago, this was 3 billion, 200 and change million. Billion. This is 81 million. So real muted market, as is obvious by the price action. It says to me that they are absolutely in the hold. Everybody standing around holding their breath, waiting for the next shoe to drop, which I suppose could be tomorrow. Certainly by Friday. By Friday. So there you go. Wow, that's really amazing. That is pretty darn amazing. It's a very interesting markets, aren't they? That's pretty incredible. Well, not going back and digging around in my screen snap bucket far enough, but I just quickly this is the 24th of July, this last week. 2,243,000,000 sell side S&P. 1,033,000,000, and then 500 million and 500 million, as opposed to 81 million, 100 million, 299, 299. Amazing, huh? This is a guy, a freaking rounding error. Wow, that's pretty amazing. I don't know, I don't understand. Well, first of all, if you're a futures trader, which I guess you are, or you wouldn't be listening to this, just take 1 billion contracts and multiply them by $12.5 per tick. That's $12,500,000,000 per tick. Four ticks in a point. Think about that. It's like saying a trillion. You can't. I personally, and I don't think many people can get their head around or accurately visualize what that really represents. How can that be? Who the hell is selling? Who's doing that? I know there's more than one who involved there, but think about that. Yeah, man. A lot. There's such big money out there involved in these markets. And when, traders, they're hunting my stops, it's just, we are less than insignificant, I think, in the greater scheme of things. I don't know. I don't know what the real, I don't think I've ever read or seen what the estimated or the real quantities for retail would be. But when you stop and think about, 2 billion contracts for sale on the close only. Those are just market on close orders. That hasn't been what somebody has transacted through the day or whatever else. And that also puzzles me how the volume can be so low on the day, or, in the millions or hundreds of thousands in the day. How can that be? Because I never see a volume that says 1 billion. That's a really good question, actually. And I'll be first to say I never really thought about that before, but never seen. You ever seen 1 billion up here in the volume? Nor have I. Now, granted, this is just the ES, and that is which is essentially the S&P, right? So, I don't know. I don't know how that works, and I don't know who I'd ask, to be honest with you. But it's a question worth asking. I guess maybe AI. Ask that chick. She might know. Three minutes to the cash close. Thanks for stopping by. Smack a thumbs up, and I'd be honored if you'd subscribe. I wish you'd drop something in the chat from time to time, even if it's not English isn't your language. Drop something in whatever you speak, because I know this stream is dubbed or translated into several other languages, so maybe that's got something to do with it. I don't know. In any case, I hope that you had a great day. I hope this stream was interesting or valuable or helpful in some way. And we're going to be shutting her down here in two big ones. 2 minutes. It's 35C and sunny here in Houston, Texas. Never would have thought I'd lived here, to be honest with you. Ever. But here we are. Not by design, but by circumstance, I guess. And that, wait a minute, that is 35C, by the way, is 94 degrees Fahrenheit for those of you folks living on the Fahrenheit scale. It is 14:58 and 50 seconds. 29 July 2025. My. My son's birthday is July 31st. Here comes the liquidity for the closing swing trades, or the closing folks. I don't ever attempt the closing swing trade. I have done it once or twice. It's pure gambling as far as I'm concerned. And in this market, when you're not getting any movement off market and close orders or, consumer confidence, I wouldn't be going if it was me. And there we have it, boys and girls. There you have your day. 7 hours and 3 seconds into the streamaroonie. And a VPOC migration right at the absolute last possible second. Who cares? So have a great evening. Get away from the screens. Go do something for your health and your family or your state of mind or something. Remember that having a balanced life is really important. You're actually a better trader than if you're obsessive, compulsive, and fixated on it, Because you do everything better when you're more balanced and healthy and rested. Be always aware of being on tilt, whether it's, altercation with your significant other, or didn't get enough sleep, or hungover, or whatever it might be, that you're not firing on all cylinders. Watch the market, narrate the market to yourself, come listen to the stream, but don't trade it. That's a real bad way. That's a real quick way to lose money. All right. Thanks a lot for stopping by. Smack that thumbs up on the way out. And see you tomorrow. 8 o'clock, 0800 Central Standard Time. Analysis of the ETH session, and then the pre-market, the numbers, upcoming reports, etc. Have a great night.